We are long overdue for a market correction. Now, I would personally say that there will be a collapse, but for the time being in this video, let's just be more conservative here and let's just call it a correction. And of course, I'm not the only one, because the Bank of America has warned that in September, there could be a market sell-off. Now, let's go into the reasons why this could happen. You have 4-week lows on the S&P. Now, they can obviously pump this up and bring it to new record highs very quickly, as they have done many times before, but it still shows a little bit of weakness in there. And you know that institutional investors, many of them, have pulled out large sums of money and are making bets that the stock market will go down. Now, the rise that they've had over the past few years has been extremely excessive, and it is really healthy for it to come down a good percentage here. A 30% market correction here would actually be very healthy for the market and the economy. And they're saying that after the FOMC meeting, after the Fed's meeting, that they're going to have some instability depending on what their situation is. So let's look into that after it happens. But for the time being, let's go global here and look at Italy and Spain having extremely high rates of debt, something that I talk about in my book. And this is a zero hedge chart here, but basically trying to show you that they are just going in a straight line upward, and you cannot sustain this. It is just impossible when there is just continuously more and more debt. And how do they fix it? They add on more debt. It doesn't make sense. I talked about in my book, knowing that specifically Spain and Italy are in big trouble. I talked about the bailouts that occurred for Ireland, Greece, and Portugal, and then said that, look, there's just too much debt going on. Spain and Italy are also highly indebted, and the contagion could easily spread to these two highly vulnerable economies. Of course, it's pretty simple. Now here it is, the Bank of America warns here the combination of changes to the forward guidance language, upward drift of the dots, and any comment seen as potentially hawkish could lead to a sell-off. And there's more in this article if you want to read it for yourself, but it's a fact. The market is running way too hot, and the policies, of course, have allowed this to happen. And that's what's concerning, but we'll see what happens after the next meeting. If they do increase the interest rates, I really don't believe it's going to be at all significant. Let's go over here. We have other things, geopolitical issues to worry about. West antics pushing Russia closer to China, something that I have said so many times before, and this is out of China Daily now. It's coming out, and I've said that as long as they continue these sanctions, it's just going to push them closer and closer to their current allies. And there's China, Iran, and the rest of the BRIC nations here that they have. And basically, this is not good for the West because it's creating sort of a boundary in between these two. So it's something to look at. Now, what's been happening over the past few years is very significant, and that is basically a destruction of the middle class. And I'm looking at this: buy condo, then add parking spot for $1 million. This is out of the New York Times, showing you the extreme rate of certain assets. And this is what it shows you right here, that some individuals can afford basically anything, and there are other individuals who cannot afford their food. That's why there's nearly 50 million people on food stamps, because you have this disparity that's growing, and the money gets sucked away from the middle class, gets sucked away from the poor, and it gets pushed into the hands of the richest of the rich. Now, just on a side topic, I want to say that if you are looking for assets, you want real estate, well, think about parking spots, because although you probably can't, not everyone could afford this $1 million spot, there are many parking spots in good areas that could be a very good asset for you to own, a little less capital and a little less for you to worry about in terms of the maintenance and so on and so forth. So look into this, be creative when you need to make income, when you need to hold assets. It isn't just all about buying gold and silver bars or buying a house and renting it out. There are many more things that you need to be creative with, particularly in the economy that we're heading towards. Be creative, and that's what I have done personally. That's what I recommend to my clients, and I hope that you will do the same as this economy continues to get worse. We need to be creative in order to survive. If you found this informative, please give me a thumbs up, and don't forget to become an insider. It's free. And it's at themoneygps.com. You scroll down to the bottom, fill in your email address, and you get occasional emails from me with good, short, concise info.